The International Monetary Fund, or IMF, just published their latest report all about China, and let me tell you, it's chock full of some exciting predictions. Let's break down the big news here. The IMF is saying there will be a significant drop in the demand for new houses in China over the next decade. And we're not talking about just a little decrease. We're looking at a massive 50% drop. First off, there's going to be fewer new households moving into cities. Plus, there are already a bunch of houses that still need to be finished or just sitting empty. All these factors combined create a challenging situation for Beijing. So, if the demand for new houses suddenly drops like this, things will be challenging for the government's plans to keep the economy growing. But why is there suddenly less demand for new houses? One big reason is that in 2020, Beijing decided to crack down on developers, borrowing too much money to grow their businesses. This was how they tried to cool down the super hot property market and stop any risky speculation. But remember, even though demand for houses is dropping, many people in China still want to buy homes. That's why the government plans to introduce new rules to help the housing market slowly. Even though the IMF thinks things might get a bit gloomy, China's representative to the IMF, Zhang Xinjiang, isn't convinced. Zhang doubts about how much the housing market will slow down. He thinks the prediction of less demand for houses is too much. Zhang wants to clarify that the government is putting in a lot of effort to assist the housing market with its policies. In plain language, he's saying that while there might be a need for some changes, he doesn't think there will be a significant decrease in the demand for houses. The real estate sector and all the businesses connected to it are super crucial for China's economy. They make up about a quarter of all the money the country makes. If fewer people buy houses, it could have wide-reaching effects. We're talking about a longer time for the market to balance out and a slowdown in how much the country's economy grows. Also, there's been trouble brewing with developers in debt. For example, Evergrande, one of China's biggest property developers, needs help with money. A court in Hong Kong even said they had to shut down. The real estate market in China is going through a tough time right now. People are looking to the government to step up with some solid ideas to fix these issues. The market hit a rough patch, and everyone's waiting for a helping hand to guide it back on track. Everyone, let's have a serious chat about what's happening with the government and the whole money situation. The big shots are putting in extra effort to make it easier for people building homes and those of us trying to buy one to get loans. They're sorting through all the tedious paperwork and saying, go ahead to more loans. But these adjustments have kept the direction of the housing market's decline unchanged. The IMF believes it's essential to give more money to finish building homes that are still being worked on. This could boost people's confidence in the housing market. On top of everything, people feel they need more time to spend money because they need to figure out their income. Plus, with Chinese stocks going down, things are even shakier. The IMF also thinks China's economy will grow more slowly. This is because people spent less money than expected at the end of last year. Plus, the IMF looked at how shifting production back home or to other countries could shake up China's GDP growth and even impact the global development scene. This shows how everything in the world is connected. When something changes in one spot, it can impact everywhere else. The IMF's latest report talks about how China's housing market is complicated and how it affects the economy. Even though there might be less demand for housing coming up, it's not all bad news. This allows policymakers to develop sound plans to keep the growth going smartly. That's all from today. Before going, click on the subscribe button for more videos.